Good morning and hello everyone. Welcome to this live intraday strategy webinar. Today is November 5th, Thursday. Good to be here with you this morning. Mark says, morning, Michael. Nice calls. Thanks, Mark. Always great to see you. Mario, good morning to you as well. Christian, Christopher, Kyle, great to see you guys this morning. So, tomorrow's NFPs, big day for the dollar. We're coming into an interesting area. The thing keeps blowing through resistance, guys. I'm looking for a turnover here. We haven't gotten it into these highs. You are still getting some divergence on the near-term chart. And a messy trigger break here, which kind of doesn't want to really break, is sort of what I've been focused on. But we broke overnight that 12,091, 12,090 barrier we talked about in yesterday's radar chart, and we moved right into the next barrier to the top side, which was, again, that high that we attained at 12,104. So you can see this former trendline support, former channel support continuing to offer resistance after the break. This is just a simple trend line, nothing special, but it continues to guide that side to the upside. And there's that high from late September that we're testing right now. We just got the release of weekly jobs claims coming out slightly higher than expected. So not getting much positive data here to start off the session. That being said, excuse me, guys, the focus will be on tomorrow's non-farm payroll. As it stands right now, consensus estimates are calling for still about 182,000, up from a previous read of 142. Unemployment widely expected to downtick again to 5% from 5.1. Here's what it looks like on the expectations front. Again, we'll be watching the participation rate. If we see that drop further, remember, we're coming off the lowest participation rates that we've seen since the 70s here in the United States. So every time we see that participation rate continue to contract, broader labor force participation, that'll tend to put some artificial downside pressure on the unemployment rate. So that's a caveat you have to watch hand in hand as we head into tomorrow's release. Heading into tomorrow's release, the dollar's already at resistance as well. So keep that in mind. We'll go over some of the dollar crosses today. As always, questions, trade setups, anything that you're looking at heading into NFPs, feel free to throw on the message board. We'll be more than happy to take a look. Relative performance to start, the dollar looks like this. You can see the dollar is kind of a split decision, stronger against the pound, which obviously fell off the side of a cliff on the back of the BOE interest rate decision. We'll go over some of the comments there. Japanese yen down 0.27%. That's still pushing higher. And biggest winner on this session is a little bit of a rebound here in the Kiwi after coming in some major support as well. We'll look at that, or turning rather ahead of some major support. We'll look at that towards the end. Okay, let's jump right in. BOE comes out last night. Let me know if you have any questions on the dollar index. So you're looking at that divergence. A trigger break could give us a downside move against this region. Again, we're just testing the highs. Here's what the dollar index looks like on the daily before we move on. You're just testing those highs from late September. Ahead of this, or if we break through this rather, 12,123 is the actual 2015 high day close. So that's sort of the last ditch effort before you look for a rally right into the highs at 12,162. What would put us back on the bearish camp? Well, if that trigger breaks to the downside, also want to note momentum here is testing resistance. But if that trigger breaks to the downside on the intraday, you'd want to see a move back below that former swing high, that 12,091, 12,089 level before we start to look for a little bit more of a significant turnaround for the dollar. All right. Keep in mind some recent developments that came on is that you heard yesterday in Yellen's speech, it was hilarious here on the desk. We were just laughing. But again, December is a live meeting. It's not off the table, really padding the decision much more hawkish than anticipated. And you saw those expectations for pricing on the interest rates here in the United States move forward. In fact, if you look at the Credit Suisse overnight swaps at this point, market participants are factoring in about 60 basis points in interest rate hikes over the next 12 months, 60 basis points. So it gives you a taste of the magnitude or the pace the markets are expecting the rate hikes to begin. So we'll definitely keep an eye on that, but giving some lift here for the dollar. NFPs are going to be a nice read here. If you get a spike higher on NFPs after a rally of this magnitude, I would be mindful. Okay, looking for a little bit of a peak there to possibly sell off a blow off high. If NFPs come out at expectations or slightly weaker, and you see the dollar sell off, that might be an opportunity to play from a scalp side to shorts, but it also might give us an opportunity to get back on the long side a little bit lower down. This is resistance, any way you look at it. Any way you look at it. If you take this back one other smidgen here, remember the long-term formation that we're in, right? We've just been off the highs, came back, and we've been in a lateral range ever since, just below the high day close. So really, the potential, if you do see a breach, is there. At the same time, if you get a spike on the news and it fails to blow through that, that might be an opportunity to fade some of that strength as well in the dollar. So again, can't necessarily trade this stateside, but a nice piece to definitely keep an eye on when you're trying to trade any of these dollar crosses, or especially coming into major event risk. Mark saying, like the Fed is going to be the only central bank in the world to raise rates. I don't think so. Besides, God doesn't want it in the winter. It's interesting because honestly, Mark, the BOE took everyone by surprise, took me by surprise, certainly. We were expecting a much more hawkish BOE. In fact, with the Fed continuing to up its rhetoric with regards to timing for the first hike, the BOE was sort of seen as getting its hand tied. If you read any of the bank research, or if you've been following some of the commentary coming out of the MPC, the data hasn't been all that bad. As I said in yesterday's piece, inflation has sort of been the only thing tying their hands, right? Data has been increasing. You've seen retail sales and broader labor or consumer consumption start to pick up. But the concern was that easing over in Europe and the neighboring Europe would sort of tie its hands, because you're seeing the euro pound really drop off a cliff, and those sudden inflows will really put a lot of pressure, upside pressure on the sterling, right? Which is not going to help the inflationary problem. So they came out much more dovish than expected. They cut their forecasts on. Let's move to the pound real quick. Yesterday's setup. So they cut their inflation forecast, they cut their growth forecasts. Some comments here, guys, that sort of highlighted on some of the bank research. It keeps interest rate obviously at 8.1 count. Cuts CPI forecast for the first half of 2017, says the pound impact to persist. Forecast based on key rate. Downward pressure CPI from the pound to ease only gradually. CPI pressure not enough for most MPC to justify the rate hike. Expect slack to be absorbed over the forecast horizon, but you saw them talk about concerns from EM markets. Downside CPI risk over the next 2 years. Outlook of global growth has weakened since August. And these concerns, especially from EM markets, is something that the markets are really paying attention to. It says CPI below 1% until the second half of 2016 now, and that's the downside, and says downside risks to the outlook. So certainly it's much more dovish than expected. Remember, coming into this, we were talking about this. Here was yesterday's setup in the intraday report, and we were talking about the downside risk persisting while within this formation. Okay, key support that we were sitting on as we closed out the session yesterday in New York was 53.58 into the 53.68 level. Nice confluence resistance there. A downside break, you're looking for targets at 53.38, 53 handle, and this is a little bit more of a key target at 52.60. That's where we're trading right now, or we're actually trying to break through. That's a longer dated 618 retracement of the advance there. So obviously, if you didn't have the position on before the release, or if you didn't catch the initial release, there hasn't been much room to sort of jump back into the trade. Certainly, we're testing a support right now that, if breaks, really clears the way for a much larger decline. Remember, we talked about this earlier in the week. Seasonality tendencies for November are actually pretty weak for the pound, one of the weakest months. So wouldn't be too surprised to see a much more substantiated decline here if we break this support. Here's what it looks like on the daily chart. Again, this is just a sliding parallel from the lows that we made for the year back in April of the formation here that was initially from the beginning of the year. Caught the highs very, very nicely. A little messy around the median line. Lower median line parallel also saw a couple of penetrations, but there's the slider, and it's right on point. Okay, it's right on point. So that lines up very nicely with the swing lows that you made last month. If we break to the downside, again, you look for the open of October, which comes in at 51.25. You look at the 618 retracement of the yearly range. That comes all the way down at 50.88. So just to show you the potential if this does materialize. Momentum trigger from the beginning of the month, also in focus. All right, and if we close today below that, you'd look to continue selling rallies here in the pound. Here's what the intraday chart looks like. So again, all the targets got taken out into the 52.60 barrier. At this point, like I said, can't see it here on the intraday chart, but that trend line support is right around this region. I'd be looking for entries on a rebound back towards 53, back towards the lower median line parallel there to try to get me back on the short side. A downside break from here, soft targets at 52.20. That completes a 1618 off the high and coincides with former upper median line parallel here. Basically into the end of the week here, into NFPs tomorrow. So, still looking to sell rallies sub 53 at this point. We'll call that the near-term bearish invalidation level. Downside stretch, you're looking at 52.20 and 52. There's that trend line, rather, that was on the daily chart. It's actually here. Any questions on the pound? Christopher Hudson says, Mike, that's also the larger 100% on the sterling at 52.20. You're probably talking about this larger move. Makes sense. Makes sense. Remember, when we're talking about the extensions, all you're doing is measuring the initial move here. So I absolutely hear you. I like it. I do like it. Now, you can express the pound dollar in a lot of different ways. Chris, I like the confluence as well. Point that out always, man. That's always a great thing, especially when you have longer duration structures and you zoom in and within the confines of just one leg of it, you get another confluence. That's strength in analysis, 100%. Those tend to be my favorite, most conviction plays. But you can express the pound weakness in a lot of different ways. Pound yen has been looking interesting. I know Mark has been looking at that since yesterday. You got to spike a little bit higher, Mark, than the entry you were looking for, but certainly, obviously, on the back of that BOE, everything's history at this point. You saw a nice break to the downside there. Pound Aussie also looks very different. I know that the swing side of trades on SB, they're in the pound CAD trade right now. So lots to look at with all the pound crosses. Chris saying, with the speed of this drop, it may not help, my man. Wow, he's talking about the confluences. Yeah, I mean, it's not necessary that you're gonna see that hold per se, right, Chris? But it's definitely gonna highlight a major target in price. And even if it doesn't hold, that's a tell too. You know, guys, we put all these targets here, and a lot of people will say, well, isn't this a little bit more noise? Like, why wouldn't you just play into the structures themselves? Well, it's not necessary that I'll see this support give me a rebound, but certainly that's a target, and a breakthrough is a tell in and of itself as well. So whether it breaks or whether the market rebounds, that is a tell on what's happening in near-term price. So long story short, this was going to be a more critical level. Obviously, we blew through that. Next downside target, 52.20. I would still be looking, Christopher, to do something there. If you're holding shorts, taking some off the table, bringing your stops down. If you're looking for a re-entry on the short side, wouldn't necessarily do anything here. I'd need some sort of near-term rebound back towards 53. Or even if you get a hold here and a topside trigger and a recovery back through 30, that might actually give us a nice long scalp just into 52.60 again to play the downside. But when you look at this, even if you look at it, guys, like on a 5-minute chart, right, for the triggers, this thing is there's nothing to do here on a new entry. There's nothing to do on a new entry. Certainly, while momentum near term is sub 30, this is when the propensity of the market has the steepest drops. So I will never enter in a short trade while in oversold condition, right? We'll want to see that recovery give us a nice trigger. Christopher says, I wish I was holding shorts. I could take tomorrow off. We'll get plenty more opportunities. Plenty more opportunities. You know, sometimes even if I don't get to catch the trade, it gives you a lot of satisfaction to see it pan out well. It means that we're on the right track. The market will always provide more opportunities, Chris. Trust me, with all the analysis and all the trades that we follow, it is bittersweet to see them take off without you when you don't get the entry, but BOE is a little too early for me here in New York, so we'll have to look for re-entry on this one. 149.50 is the January low, Mark saying. Sterling, I think that's a good target. As far as a longer-term move here, 49.50. Yeah, I think we talked about this briefly yesterday, right, Mark? I have it a little bit lower at 48.60, 48.50, this region here. A broader 1618 off the high and a 764 off the low of the yearly range. That's a powerful confluence. But that 40 region does come into play with the sliding parallel that has given us some support along that slope. So it depends where we are in time. But I do like around that region. In any event, from my standpoint, again, we take it one level at a time. So the initial tell that we need is a close below that swing low from October, and then a push back into that 50.87, and the high and the low day close at 51.25. All right. All right, so if there are no more questions here on the pounds, we will move right off. For any of you who are holding positions, again, the scalp chart or the radar chart, excuse me, the scale chart has the subsequent targets. So don't forget, guys, if I have the scalp chart here for you and you get through all the targets, just take the scale chart out and it's going to show you the next downside subsequent target. So beyond here, 52.20, and again, that 51.25 level to the downside. Or excuse me, that's just the 52 handle. Okay, nice drop here in the pound. I do see some questions coming out. Avery wants to look at Euro Yen. Let me jot that down. Let me just get through some of these levels from yesterday, Avery, and then we'll definitely jump into Euro Yen and the Euro Dollar for that matter coming into the NFP print. Okay. The other setup from yesterday, which was kind of a disappointment because it didn't move with us or against us. He did get a play to the upside, but it's kind of fizzling out here. Here's what the Aussie looks like from last night. So, you know, you came into a nice support confluence. It was a 618 retracement, so you tend to respect those a little bit more. You saw us react off of this trend line already, former resistance breakthrough as support again. So the risk was for a rally back towards 71.58. You know, I was in a little bit of a long. I took off half at that trend line and then left the limit at 51.80.58. It came back and stopped me out at break even on the rest. We came right short at 51.54 or 71.54, excuse me, before turning around. You came right back into support and rebounded again, right through, and again just shy of 71.58. Here's what it looks like now. Remember where the Aussie's coming from, okay? Here's the daily chart before we jump into the scalp. You came into a huge region of former support, current resistance, major inflection point range in price, and that's basically 71.80 into the 72 handle. Looking at a broad, long-dated 618 retracement, a basic 236, but more importantly, price has given us so many pivots here. While you did see some breaks to the upside, some breaks to the downside, if you bring this into a close, show a line chart, you can see real nice pivot action here. Break, resistance, break, support, break, resistance. Okay, so we were on the long side earlier in the week. We came off that resistance. Downside, we're looking for some support while above this trend line to get back on the longs. Okay. Here's what the scalp looks like. Okay, so it's the same formation. There was the rallying overnight that fizzled just ahead of our target, 4 pips shy. Turned around, again, we got stopped out at break even for the rest. Here it is again, making another run towards that key region. Still going to be 71.58. That's a swing high from last week. Also coincides with basic trendline support or parallel support, whatever you want to call it, just shy of that 71.58. If we break above this, you're looking right back at 71.80 and that 72 region, the same key resistance region that we highlighted right here. So Aussie's poised. And as I said yesterday in the range that we're looking for the break, we're still looking for a break of that same range. 71.25 to the downside, 71.58 to the upside. If we clear this, I'd love to play the recovery back higher. We'll continue to look higher in the Aussie. It would sort of coincide well with the dollar index holding that near-term resistance and turning around. So really, picture again, the puzzle pieces fit really nicely here. Momentum is sort of flatlining. We are finding some support at 40, which is encouraging. We saw the first 50 break that we've seen since earlier in the week here on the 3rd, which is Tuesday. So it is encouraging to see this, but we need to clear that 71.58 region to get the clearance back to the upside. As long as we stay below this, guys, the risk is still for this thing to break down. And if we do, a break of the lows targets 71, and that's the major support. That's the major support. 71 is going to be that trend line there. This is a parallel of the same slope off the highs. The lows for the month come in at 71.09. The monthly open comes in at 71.13. And they all coincide right there. That's going to be the broader bullish invalidation level. All right, so if anything, you have clear levels on the Aussie. We just want to see a little bit more of a reaction and get out of this range that we held earlier in the week. It's the same exact range to get some clarification on this. You're out for Aussie data for the rest of the week. Look for NFPs to give this thing some guidance. Remember, as we head into the NFP print overnight trade, you're likely to see the ATR contract a little bit. You're likely to see sort of a lackluster price action as we head into that major release. All right. Any questions on the Aussie before we move off? Remember, guys, for anyone who's new to the room, I see some new names here. Remember, you can always take a freeze frame or a screenshot of any of the charts you see presented. Just click on the camera button in the top right-hand corner if you need to save the charts for future reference. Okay, let's move right along. A little bit behind on time here today, but we're getting through. That's sterling and Aussie. Let's take a look at some of the radar charts from last night. We went over the dollar index, holding that 12,104 level right now, confluence resistance. The other radar chart was dollar CAD. If Mark, if you're in the room, Mark Dowell, I tweeted this chart for you last night. You were asking about it. Look, there was no plays here for me yet, but the levels, again, are one of those pairs that have super clean levels at this point. Yesterday, we highlighted near-term support at 31.50. That's what we came back into. We've tested it twice now. The resistance that we highlighted last night also still in play. So you're looking for a break either below 31.45 or above 31.90 to give this thing some go. Ideal scenario, it stretches into a new high and you try to fade it. That new high being 32.17, 32.20, this region here. It would be the median line, so a nice clean break of the median line, test of the lower median line parallel, go back and test the median line as resistance, then move off again. This also would confluence with a longer-term median line dating back to the highs. Let me just bring that into focus here. This structure. So you can envision a scenario where you see a dollar spike, come into that region, fail, and you get a nice downside play back towards 31 31.15. This region right here would be sort of the ideal spot for a target on the downside. But again, that's all speculation at this point. Momentum has gone sort of lateral. We're holding above support. Technically, this would be sort of a break, an attempted break of the weekly opening range, guys. Here's your Sunday open. Set a high, test the lows, you fail. You break the highs. You test the highs as support and move off. So technically, this is a really important support near term that we need to break below if this thing's going to turn around. As long as it holds above, you want to be cautious on trying to get in the longs on the short side here for dollar CAD. But those median lines that we added yesterday in the webinar are still like key. Okay, so basic trend line support, if you connect the lows, has offered some nice pivots here. And over the course of this week has capped every advance. So you know the levels. You just need some guidance on near-term directional break here for dollar CAD. Again, no involvement in this one. Actually, the ATR here has actually been expanding. It was at 28 pips yesterday or 29 pips, and here we are pushing higher. Nice 30 pip ATR. Any questions on dollar CAD? No change to the outlook there. Levels are clean. Looking for a possible high to sell or a break back below 31.50 to get involved here. The other chart from yesterday's radar was Kiwi Dollar. Another lackluster one. It's actually one of the best performers today versus the dollar with a nice upside stretch here, but you're still holding this downside slope, and we really need to get through 66.40, as I noted yesterday, to get this thing on the upswing. You know, I really don't want to start calling a low on this until we see a much more prominent shift, not only in momentum, but in price. Here's what it looks like. Oh, by the way, here's a dollar CAD daily, which didn't go over this earlier, but if you need to take a photo of this, the same exact levels, guys, for the dollar CAD. But Kiwi Dollar looks like this, okay? And we broke the 38.2 confluence. We talked about that yesterday. 65.65 was sort of where we were looking for a near-term support to get a rebound higher. Within the confines of the slope of the near-term chart, which I'll show you in a moment, you just missed it before it turned around. Here's the 30-minute looks like, and this is what I'm talking about. So this slope and the 50% retracement, I was looking for sort of a dip right into 65.65 here. Like I said, we didn't quite get it there. Here we are testing one of the parallels off the highs. Near term, if this breaks 66.44, which is what we noted yesterday, you'd expect to see a larger recovery in the Kiwi. Okay, but near term, as we open the U.S. market, this is resistance right now. All right. So you didn't get much play in this in overnight trade. Really, most of the play started when you got the open of the European session. I was sort of waiting for a decent entry on here all night. Didn't get it. I thought we were going to get that last dip lower. But just to put things in perspective, let me just zoom out real quick. Just to put things in perspective of where we are in price. Any questions on the Kiwi Dollar? Craig, we will go over that in a moment for sure, the euro crosses, so stand by on that. Christopher said, it's interesting how a spike in dollar CAD would coincide with Aussie dollar at 7,100 support and Kiwi at the bottom trend of the pitchfork. Chris, I like the way you're thinking, man, right along the side. So coming into NFPs, you got a really sort of good game plan of where the key levels are for all of those pairs, and it would coincide really well. Now, again, sometimes when it's so obvious like that, it gets a little concerning because I start second guessing if it's too clean. But with where the dollar is, I find it hard to believe, guys, unless we get a blowout number tomorrow, like 220, 230, where now you're talking about unemployment being at 5%, the quote-unquote natural rate of unemployment from the Fed. Then you're talking about inflation, which seems to be moving closer to target. We got an uptick in core CPI last month. And it really, I mean, it really puts the gas pedal on having to hike interest rates from the central bank. So you could definitely, where the dollar is placed on the back of a rally like this, you can definitely envision a scenario where you get one last spike high, maybe test that high day close, then you start to move off for a little bit more of a steeper correction. That would put a lot of those plays in dollar CAD, Aussie dollar, Kiwi too. Chris, you're absolutely right in play. All right, so those are the three trades that were highlighted on yesterday's radar charts. Let's go ahead and jump into your questions here, guys. I know some of you want to look at some more sterling crosses as well. But first things first, I see a lot of questions on the euro, so let's jump into that. Euro yen specifically seems to be of interest here. Craig wants to look at euro key, euro Oz. So first things first, guys, let's just take a quick look at what the euro dollar is doing in and of itself. Here's the euro dollar in a daily. It seems weird to me, not weird, it seems frustrating that I haven't gotten any euro scalps out over the last 2 weeks, despite this massive decline. You know, you're looking for a sort of a near-term pullback to give you some sort of play, but this thing's been, has just been a slow drifter. So here's the levels I'm looking at. Right now, it looks like you're testing the 100% extension of the decline off of that high from August. You're below trendline support off the yearly low. Momentum is below 40. There's nothing bullish here. But again, I'm not going to start selling at the lows. And when it comes to finding near-term intraday levels, the last time price action was here was back in July. So it's hard to find actionable near-term levels to play with. So I haven't touched the euro dollar. I do like some of the euro crosses. We had a euro Oz setup that was highlighted in yesterday's or Wednesday night's Tuesday night's rather intraday update. So check out that 11.2 update on the intraday charts for that one. But euro dollar, still a hands-off trade for me, something I kind of just want to watch. You know, this hasn't been the most conviction move into these fresh lows. Here's what it looks like on the 30-minute. Okay, same levels. Nice slope action, but still, for an intraday guy like me, if you don't catch this break, it's tough. It's tough to get excited about a euro dollar trade per se. Here's some divergence into the lows. Again, I did see the trigger break on this earlier today. I was looking at this, but it wouldn't have been a conviction break in price. So it's probably not a trade I would have taken anyway. So euro could see some upside. I wouldn't be surprised for this thing to check 109.50 even. Excuse me, 109.10 into 108.90, sort of this low here from last week. Former or current slope resistance, right? Might be a nice entry, but from my standpoint, it's a little tough to see this one here. Euro yen, which is what something all of you have asked about. Here's what it looks like on the daily, and then we'll jump into the 30-minute. So euro yen is just simply checking and sitting on this 618 since the start. Well, I guess since last month. Here's the November open. And you've just been sitting on that. It's right around 131.80. The low that we made yesterday's price action was right here at 31.83. We just missed it, right? So this was that confluence support that we looked at earlier at the close of October trade. I still think you can get a spike down into it. Euro seems tired on the downside. I don't know what to do here. You're sitting right slap in the middle of not only the weekly opening range, but the monthly opening range per se as well. So I don't really have a trade for the euro crosses here, guys. I think the levels are pretty clear. If you do get a final directional break, either clearing that monthly high or specifically clearing sub 131.23, I think it could get real messy. That being said, it's tough to get excited about. Here's what it looks like in a 30-minute. Here's your weekly open. The only thing that was clean was a clear break of the weekly opening range. At that point, you did just miss target, like I said, by like 3 pips on the downside here. You're checking the opening range low now as resistance, but momentum is back above 60. So for me, again, this is kind of a hands-off play for euro yen. Craig, what do you And Avery, let me know if you have any positions on euro. She's saying I have short euro yen around 132.70. I love the entry. Absolutely love the entry. From a scalping standpoint, as per our strategy, you should already take off something here. You're about 27 pips in the money. That's a quarter of the daily ATR. So at this point, you want to shave some off, maybe bring your stops down to break even. But the momentum signature on this break is the first 60 break for the week. Okay, so it's not something I definitely not necessarily want to fight to the downside. Here's maybe a trigger you'd want to consider. Okay, now that we made that low, bear with me. Let me do some on the fly here. We're kind of just going to run with this and see what kind of levels come out. Okay, 236 comes out just higher at 32.84. Okay, so I would actually highlight this entire region. You can see clear-cut pivots right in that from price, right? So remember, we're never just chasing Fibonacci levels just based on their own merits. Prices also need to show us some sort of reaction. Nice support, break. Here again, we start off the week, support, support, break, instant resistance. Checking the bottom part of that range right now. Highlights the significance of a topside break. That's why we want to highlight that there. That's just a swing high. Let's get rid of that. Okay, let me just see what this looks like. Okay, let's work with this one for now. But here's what could be happening, or a proposed pitchfork that could be in play. Again, we haven't really gotten too many pivots. I like the median line, the premise of it, but we'll have to see if that actually holds. Long story short, from near-term prospect, your downside 132. What is that? The opening range high for Asia. Sort of what I'd be looking at there, and that's the break that you would need, Avery, to get this going for a little bit more of a steeper decline towards the downside, checking that major support at 131.80 that we just missed. But that's sort of what I'd want to see clear to the downside. It also highlights a topside breach objective, and if that 132.85 level gives out, if this region gets broken again, this would sort of be your initial target. The basic 38.2, 133.62 coincides very nicely with that median line off the lows. Does that make sense, Avery? Says, thanks, Mike. Hey, more than welcome. More than welcome. Execution on that entry on the short was ideal. Just remember where we are in broader trade. Guys, I take counter trend trades all day long, which is part of the reason that I can't really tweet out every trade, because although the near-term bias or the broader bias might be bearish, I'll take counter trades all the time. I'm half leveraged like that I typically would be, and we're a little bit more nimble in them. On a trade like this, it's just important that we note that we're coming into some support. You got that divergence into some lows. You got the first 60 break of the week in momentum. Now you want to just take your foot off the gas a little bit from the downside. All right. Avery, again, I hope that helps, and I appreciate your comments there. As far as the other Euro crosses, let me see what Craig wants to look at. He says, good morning, Michael. In the next day or so, I'm thinking about fading the Euro weakness if I find entry triggers to go long Euro Kiwi or Euro Oz. Your thoughts, please. Euro Oz is a different animal for me, Craig. I went over that setup, like I said, on the second of the month. It's just because no, we're coming in some support, and I would like a Euro Oz sort of long bounce from lower down from where we are right here. But my concern with that is if the Euro, or excuse me, if Aussie does make that break above resistance that we talked about earlier, I think it could get a really decent move to the upside. Actually, we're breaking it right now. So near term from here, you look for a rally into 71.80 and 72. But if we break through this barrier, I think you can get a substantiated Aussie rally, which I think would limit the upside potential for Euro Oz, right? Which would essentially be an Aussie short. So that's one issue I have on that. But let's take a look at Euro Key. I haven't actually seen that in a couple of days. Yeah, it does look like we're sort of trying to base here, doesn't it? Nice rounded bottom here. Yeah, it could be a decent play. Any type of ML structure here is going to show that it broke. Let me just take a look. Ooh, all right. So you just completed a exact 100% extension off the high in Euro Key. That's going to be the tell there. Okay. If this thing is going to give us a really serious move higher, or this is just a simple rebound off support. This is a check of the former opening range high for the week. Craig saying Euro Key divergence into lows at support, waiting for a possible trigger to play rebound for 50 pips. What time frame are you seeing divergence into the lows here, Craig? Because I don't see it necessarily on the 30-minute, right? Let's see what this retracement looks like. You're at the 50 right now. Whoops. He said I was looking at a 5-minute and 15-minute. Sure, let's bring that up. We're looking for Euro Kiwi. Yep, absolutely. So there's divergence into the lows. Price action making a lower low, the oscillator making a higher low. As far as a trigger is concerned, you actually got a decent one. And you're not too far off the lows. This might be a decent candidate. I would just be careful about trying to get too aggressive on the long side just yet, because you really haven't gotten the confirmation necessarily in broader price from here. I would love that pullback to get a little bit steeper before trying to play along, but in general, sort of this type of scenario. You could see something like that happening, where it dips in, tests maybe the 618 or just ahead of it for that slider parallel tag and then move higher. But in general, I like where the idea is at. I like where the idea is at. And it's a much better sort of confluence play in my opinion, because the Kiwi broke some major regions. And while today you're seeing a rebound, I think inevitably you sell that rebound, right? And further Kiwi weakness might give us a nice pop here in Euro Key. So actually that makes sense. Craig, makes sense. So Kiwi's at resistance. There's the resistance we just highlighted earlier. Might be a decent play. Watch that trigger. Watch that trigger. Hope that helps, Craig. If, by the way, if I just go back to that real quick, if I may, if you do see a downside break, just eyeing out these targets, I wouldn't put it out of the woods yet. Okay, 63.50, 63.46. Next level down. Craig says, thanks a lot, Mike. Appreciate it, Craig. Always a pleasure, my man. And last but not least, one that we missed, I don't think we talked about this, Sterling Oz. Someone asked a question about that earlier today. Here's what the Sterling crosses in general look like. Obviously, on the back of the spill, you're looking for a position to sort of squeeze in here to get some of this play. Here's a quick look at Sterling Oz. I haven't been following this too closely, but I just slapped this together before the webinar. A lot of interest on where we are right now. I would be focused on a near-term support target down here, the lower median line parallel. Scroll this out and snap these lines real quick. So, I don't know why these circles are gigantic, but right here, the lower median line parallel, and that coincides with a key 618 retracement as you head into tomorrow, basically to US trade tomorrow. It's a 618 retracement off the high, and that'd be the lower median line parallel. Really clean structure. Really clean structure. And even though we didn't necessarily get a rebound off that median line, price hung there for a good couple of minutes before he actually broke. So the only thing I wanted to add on this was an extension off the high. And if we do that, clean this up a little bit. This becomes a new bearish invalidation level near term. And this becomes new support near term. Okay, this is a soft target, 21.77. Get rid of that. So these are the levels I'd be looking at near term for the Sterling Oz. Immediate Immediate invalidation of the bearish bias is 213.63, 213.53 is 10 pip range right here. If you break back above that, you're likely to see a rally back towards 214.90, which would be quite a big stretch. I wouldn't want to be on the short side of that. While below here, you're looking for a pass into 212.20, 212.24. Try saying that 3 times fast, and then that confluence region into the 618. I like it though. Nice turn in momentum. It's been bearish all week as far as the momentum signature, but the failure to hold above 60 and subsequent break into oversold really solidifies that bearish near-term outlook. All right, so that's Sterling Oz. I hope that helps. Mark Haverman saying if there's time, oil is testing at 38.2, might move up from here. Dollar CAD short. So oil, right, did some wicked moves yesterday. Oil and gold, you're just getting massacred. Gold is, every support target, we noted this yesterday, every support target that we even looked at has just been getting slammed. So, basically look for 1100 in gold. As far as crude, that was also a major reversal yesterday. There's the 200 or the 100-day, moving average, 618 retracement of the entire decline off the October high. And we were looking for the support hold at this median line. Didn't get it. In fact, you're breaking way back below it now. You're looking at the weekly low. You're seeing a 38.2 there, Mark. Is that off the lows from that October swing? Actually, it's the 50% coming in at 45.45. Oh, there you are. That 38.2. Yeah, I wouldn't stress it. I wouldn't be looking at it. Why? Because the monthly low comes in just lower, and I definitely, if it's going to be a basic weekly, monthly opening range type of gig, whoops, you'd want to respect that low for sure. 45.54. Let me clean this up for you guys. Hold on one sec. Whoops. 618. Right. So key levels for crude heading into the start of the month. 43.18 to 43.50. You got the median line off the highs, 618 extension off the highs, and 50% retracement off the lows. Near-term support 45.54. Resistance we noted, a breach above the upper median line parallels needed to get into that key resistance level again. This was a huge overlap that we caught last month. Key 618 extension, overlap with 50% of the entire decline, on a closed basis is really well respected. Mark, does that make sense? He says, "Oh, okay, high to low. Okay. I hope that's on the same page there, Mark. Hope that offers some help." He says, "Yes, snapshot taken." Right on, man. John says, "Hi, Mike. Do you think this could be the start of wave 3 in oil today? Looking at the new low and pullback. Thanks." Could be. Three wave. Oh, this could be wave 3 in oil today. It could be, for sure. And in fact, if it is wave 3 of a sort of a correction to the downside, you'd look for a much steeper pull below 43. I don't trade like that, though, John. You know what I mean? I don't trade this is wave 4. It could be the extension of wave 3 because I've seen, look, Elliott wave can be such a huge, amazing tool when implemented, in my personal opinion, with a little bit more prudence. I'm just looking for identification of a 3-wave advance or a 5-wave advance. To get the broader directional bias. When the wave count is obvious and it's in my face, that's great. But to try to, gauge or over signify, what what wave we're in or what structure could be. It's just not the way I trade. I look at conditions on whether we want to be long or short, John, and key levels of which markets will give us a possible break, continuation, or a possible reversal based on momentum. Could very well be. I have no idea. And that's the problem with Elliott. A lot of times you don't know until the wave count is done. But even that can be informative because you'll be able to identify the broader directional trend you're trading within. Does that make sense? It's cool. Thanks, Mike. Anytime, John. Anytime. I'm not trying to divert the question. It's just, Elliott for me, I just don't want to stress it too much in my trading. But as far as crude is concerned, could very well be. I would not be surprised to see this thing make a test of that 43, even deeper maybe. So we shall see. If anything, guys, on its face value, it's simply putting in a really, really clean opening range. And again, I just don't like the fact that we're sitting right at the middle of last month's range. I'd like to be more closer to the highs or closer to the lows or closer to some sort of resistance or support before trying to take a stance on this. All right. Okay, I think I got everyone's questions. If I missed it, guys, give me a quick ring right now, but I think I went through all of these. So heading into tomorrow's NFP print, I want to wish you all the best of luck. Keep in mind where the broader dollar positioning is. I mean, the propensity for a bull rally or a bull or a market rally to be pressed even higher on a release like this, outside of it being a stellar print, really puts the risk for a downside. Either on a at expectations print, you might see a spike to fade, or on a stronger print, you're probably not going to get a chance to get in on the long side for the dollar if this thing blows out through 240 plus or 250,000 jobs. So the game plan is for either a weaker print to give us a quick spike to sell, or if we do get that more significant pullback towards trendline support down towards 12,071, might actually be a decent long entry again. It really depends on what the data comes out. As it stands right now, we're at resistance. We're going to continue to watch 12,103, 104, which is the highs in the previous month, or a breach through the high day close at 12,123 would sort of validate a breakout, and you'd be looking much higher in that scenario. Kyle, Euro Yen, my man, or Monmohan, sorry, excuse me, Euro Yen. We went over it earlier in the session, so definitely, feel free to review the archive. We went over this at length. So here are the levels real quick if you want to take a snapshot for the near-term levels I'd be looking at. But you can watch the rerun on that. Kyle says, Mike, you are stellar as always. Thanks so much. Have a great weekend. Appreciate that, Kyle. Always a pleasure. Gary says, hi. Sorry late to the webinar. Did you cover dollar yen? If so, no worries. I'll watch the archive. My man, Gary, thanks for coming in because we didn't. And I would be completely remiss if I didn't at least talk about dollar yen heading into tomorrow's print. Look, this is huge. In my humble opinion, this is huge. We talked about resistance at the 200-day moving average at 121. We blew through it. Once that broke, we said, look, there's nothing here until 121.75, 121.83. That's basically the December high of last year. The 100-day moving average. The 618 retracement of the decline off the August highs. And they all sit right there. Today's high, we probed right through, went to 121.93, but you'll give me a 10 pip allowance. This is big, okay? Watch momentum. We haven't seen a 60 break in momentum in dollar yen since back here. That was a clear definitive break of that same December high. Here we are again, knocking on the door for 60. Price is at resistance. The close of this week is going to be paramount. And again, we don't want to be stuck trying to call the high here, but if we're going to find some resistance, this is, I think, where you'd find it. In fact, it's funny because the spike high, you had an uncovered close here, and that's exactly what you spiked into. It's the uncovered close from August. That close was at 122.01. Today's high 121.93. So give it again a pip allowance there. I do not want to be pressing longs from here. If we close through here or if we break through, you've got plenty of room. In fact, if we just tack on the 786 to give us some reference, I guess we'll make it a 6.4 on this point. Brings your next target not till 123 for 100 pips to the upside, more. And that would coincide very nicely with the lows, but I really can't stress how important where we're standing right now. Mark says dollar yen, a median line from June 1st low and July 8th. Yeah, that is a weird median line. You're right. He says it's a weird, but hey, it works. It is a weird one. Wait, what? July 1st. I wouldn't be too opposed to using that, actually. I would not be too opposed to using that. Who showed you that trick, Mark? Use the deader slope, right? Yeah, that actually might work a little bit more. As I said, as I always say, didn't even, he says you did, doesn't even matter if the technical feature is a fib, if it's a moving average, if it's trendline resistance, if it's a median line parallel, as long as we're looking at the same levels, right? And the fact that we're at all this fib confluence, December highs, the 100-day moving average, the uncovered close, and you add that to it, cool. Even more conviction, right, Mark? Love it. Love it. So watch for that resistance. On the near-term charts, guys, for dollar yen, I really don't have too much to really share. Here's what I would be looking at. Some of these fibs are sort of stale because we've broken through them, but they've offered some nice pivots in price, so I've kind of just been leaving them on the table. Long story short, highlighting the same region we're at right now. I really can't stress how important, at least to me, near-term this is. If you do see a break, let's clean this up a little, I guess. Actually, that works. Near-term targets for dollar yen, not bad. So again, basic channel support, real near term, 121.57, just basically below where we're trading at right now, about 10 pips lower. A break below there, and a break of the trigger break that is in place since last week would put the focus for a near-term pullback here in dollar yen, for sure. You're also getting some crazy radical divergence all week long, right? This thing has been unable to make new highs in momentum. This price action has continued to press into new highs. Again, levels I'd be watching near-term for dollar yen. Christopher Hudson says, good luck tomorrow, Mike. Have a great weekend. Same to you guys. Again, thanks for everyone who attended. We will be back on the webinars Tuesday, Wednesday, and Thursday next week at 8:30 Eastern. As always, don't forget the free public webinar. I do that on Daily FX, guys, just to give them wet their tongues a little bit for the type of analysis that we do here on a daily basis. So don't forget to jump in there on Monday morning also at 8:30. We'll keep you updated on SB Squawk as best we can. Best of luck trading, and we'll see you next week, guys. Cheers.